Welcome back, investors, to Ticker Time News. I'm Adam, and true to its form, shares of GameStop, ticker symbol GME, have been on a roller coaster ride in the wake of the company's Q4 earnings. Although the stock has recovered its earlier losses, the fundamental story hasn't really materially changed, as GameStop's weak results highlight the challenges of orchestrating a massive turnaround for the company. Supply chain issues and effects from the Omicron variant tag team GameStop to restrict Xbox and PlayStation sales, so much so that hardware and accessory sales increased by a slight 2% year over year. But compared to growth of 21% in the same quarter from a year ago, and that's a submission on hardware growth. In the meantime, the company continued to invest heavily in its workforce and technology as it transforms into an e-commerce and digital-centric company. The end result was that EPS plummeted to a loss of $1.86 a share, from a loss of $1.34 a share in Q4 2020, and as gross margin shrunk by 430 basis points year over year to 16.8%. And SG&A expenses, well, that jumped by 29% to $539 million. Okay, before I share something good from the report, beat this crazy market with us by clicking the first link in the description. All right, an important silver lining is that software sales growth accelerated to 7% following a 2% decline in Q3. This improvement enabled GameStop to generate overall revenue growth of 6%, topping pre-pandemic growth levels for the first time. That may not seem like a major accomplishment, though, given that GameStop routinely experienced year-over-year revenue declines prior to the pandemic. However, the fact that software is leading the recovery is a very encouraging sign, since GameStop's future hinges on its ability to reduce its reliance on physical games. Regarding GameStop's future, CEO Matt Furlong highlighted several key steps that the company has taken to reshape the business and position it for stronger growth. Of particular interest is GameStop's expansion into non-fungible tokens, or NFTs. Over the past year, the company has assembled a new dedicated blockchain team to help it capitalize on an estimated $40 billion market for NFTs. With support from new partner Immutable X, an NFT marketplace is expected to launch by the end of Q2. Using blockchain technology to record transactions and ownerships, digital currencies and NFTs will be used to purchase in-game virtual items. Enhancing e-commerce capabilities is another core component of the turnaround strategy. Effects to this end include the launch of new fulfillment centers on both the East and West Coast of America, and revamping the app to streamline the shopping experience. After raising about $1.67 billion in capital last year, GameStop has the financial resources and flexibility to weather this turbulent period. However, for the sake of transparency, it would be preferable if its executives would provide financial guidance so that investors just like you and me could have a feel for the recovery timeline. So, GameStop executives, if you are watching, please consider this request. Now, the key takeaway from earnings is that GameStop's transformation remains very much a work in progress. Investors shouldn't expect a return to profitability anytime soon, as the company plans to aggressively invest in growth initiatives, most notably blockchain technology and NFTs. While I am intrigued by GameStop's long-term potential, I believe that the fundamental picture will remain mixed at best for the foreseeable future, leading to more volatility in the company's stock. So, what did you think about GameStop's earnings report? Let me know in the comments below. Smash that like button, share this video, and beat the market with us by clicking the first link in the description. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.